Welcome to the Tough Decisions Network for Entrepreneurs. I'm Dennae Handford, and my wife, Dennae, and I interview successful people sharing stories behind tough decisions that they've had to make along their journey as an entrepreneur. On the podcast with us today is Buck Joffrey. Buck, welcome to the podcast.
Hey, thanks for having me.
Hi, we want you to get us started and just tell us a little bit about your background, who you are, and where your focus is right now as an entrepreneur.
Yeah, so I started, oddly enough, as a surgeon. So I finished my training back in 2008, 2009, and kind of got inspired by Robert Kiyosaki's cash flow quadrant, and so started my own practice, converted that into a business pretty quickly, got the entrepreneurial itch, did that a couple more times with a few other medical practices, ultimately ended up getting involved with a number of what they call alternative assets, specifically in real estate. And I ended up moving out of Chicago, moving to Santa Barbara, and now I am a full-time podcaster. And I guess I'm a asset manager for the most part. And that's kind of my story.
So just to kind of fill in the gap there, what kind of alternative assets are you referring to?
You know, we're primarily focused in real estate, but certainly there's other, life insurance type products and life settlements. I've even gotten into some things that are completely, probably a little bit new and interesting for people, but they'd be scared of them, like cryptocurrencies and things like that. So primarily what I do right now is, I have these podcasts, but I have a accredited investor group, and I effectively, what I do is we act almost as a family office and go into opportunities and provide equity and try to, find good places for people to invest in.
Those primarily like commercial, multifamily, self-storage. What are the kinds of real estate you guys in?
Yeah, so multifamily for sure, several thousand units across the country. Multifamily, we're in the self-storage space. We're also looking at some potential opportunities in mobile home park space, but we haven't really necessarily gotten in there yet, but it's sort of in the middle of due diligence there. But yeah, certainly I think the things that I think multifamily is the preference generally for the way we operate, so.
Sure. So I want to dive in a little bit about your journey as an entrepreneur and some tough decisions that you've had to make along this journey. And the first tough decision that we like to dive into is one that I call the sore thumb tough decision. It's a tough decision that can stick out in your head at any moment when somebody starts talking about, a decision that you made that didn't have that good of an outcome. And so can you dive into that tough decision that didn't have that good of an outcome and some of the lessons that you learned through that decision?
My first business was a cosmetic surgery business where I was the owner-operator. Within a couple of years, it was doing extremely well, and I hired a couple other guys and got the itch, like I said, where I started another type of practice, slightly different, but I was spending more of my time on that side of the business, or that business rather, and I got greedy because we're making a lot of money between these two businesses. In cosmetics, I decided, well, if we can do it here in Chicago, which is the third largest market in the country, why don't we open up a few shops across the country? And so I did that, tried to do that, and I was in about, at maximum point was about 5 or 6 different markets, and try to reproduce the model of heavy marketing and basically, cosmetic surgery. And I just realized, it didn't work, and it didn't work because for the most part, I think I was undercapitalized. I didn't really know these other markets, et cetera. So it ended up being a pretty significant loss. And when I look back, for me, I think the story there, I think for me to think back is, well, gosh, if I had just, stuck with what I had, I would have been literally, millions of dollars further down the road than I am now, which, I'm still doing just fine. But that was a significant setback that was probably because of me getting greedy.
Well, and what are some things that you would look back on that decision and go, what are some things that I maybe could have done differently? Because I can see so many parallels with what you had talked about earlier about, doing some of these alternative investments in real estate and how maybe you might research a market a little bit more deeper before diving into that market and various things like that.
Listen, I think when you're a lot of younger entrepreneurs, and I say younger, and I was 33 when I finished my residency, so I didn't really start my career until I was in my mid 30s. But that was my early time as an entrepreneur. It's about 10, 12 years ago. And the thing that I think a lot of entrepreneurs end up doing is they get in their head that they can start like 10 different businesses, because that's what we like to do, right? We like the creative part. We like to do different things. We like to follow shiny objects. But I think once in a while it takes getting burned badly to understand that, you have to focus on your core competencies and what you're good at and how much time you actually have. A guy I know by the name of Dean Graziosi, Dean said, I think something that is really important. He said, his business, I think, is, over $100 million per year in revenue. And he said, saying yes got me to 10 million, saying no got me to 100. And the idea there is that, listen, you've got to at some point say, okay, I am not going to expand horizontally anymore. I need to build vertically. I need to focus on what I have and scale that way. And I need to understand what my limitations are, because I do have limitations. And that's hard to admit sometimes for a serial entrepreneur like I am. So
I want to shift here a little bit and start to talk about a tough decision that you've had to make along this same journey as an entrepreneur that had a really good and positive outcome in some of those lessons.
So sometimes, I think conversely to what I did with the medical stuff, when I moved out here to Santa Barbara, I was starting to really just try to deliver as good a content on my podcast as possible with no strings attached on Wealth Formula Podcast. And what I found is if I was just doing what I love to do and just talking about it, that people would get to know me. And if they got to know me, I could potentially build a brand around that. I think that for me personally, the aha thing was that I didn't need to have 6 centers in 6 different states to create something very powerful and profitable. I can literally sit in my office and do podcasts and, engage individuals. And when they get to know me and understand me and trust me, then I can create a business around that. And that's effectively what I've done. And the beauty of what I'm doing now is it's not brick and mortar for the most part. Of course, it is brick and mortar in terms of acquisitions, but in terms of the actual movement of money, it doesn't require me to have, 150 employees. It doesn't require me to have 6 different leases in 6 different states. So for me, what a big thing was, and listen, there's people out there who thrive on having all of those different types of things moving at the same time. But I mean, we were at one point, the businesses were doing $15-20 million of revenue, and I wasn't seeing a whole lot of profit from that. So it doesn't really matter. Your top number doesn't really matter at the end of the day. We always like to, as entrepreneurs, look and brag about our top number, but what really matters is what you're bringing home. So if you can do that more efficiently and effectively with a smaller operation that you can scale in size by utilizing all the tools that we have these days vis-a-vis the internet and, in my case, podcasting and all that, then that might be a better option. And so that's the thing that I'm really focused on now.
Do you still have any of the clinics, or did you exit all of those?
I still have the offices in Chicago, and they're still fine. They're going. I've got management in place. I'm not really involved. They're passive assets at this point.
It's an alternative asset for you now.
I guess that's right. I mean, I think people think of passive assets and they think of just real estate, but businesses can be passive assets too. So
it's just that businesses are typically a little more risky.
I would say they're a lot more risky and there's a lot more upside, right? So I think in entrepreneurship in general, I mean, that's the whole beauty of it, right? I mean, it's like the opportunity. an entrepreneur doesn't put $100,000 into a business thinking they're going to get a 10% return. But, that's part of personality, I think, and that's part of the risk. It's a risk-reward thing. It's an asymmetric risk situation.
Talk a little bit about some of the strategies that you employ when you are facing a tough decision.
For me, strategy-wise, I think I trust myself for the most part. I mean, I listen to other people, but I think at this point in my career as an entrepreneur, I just trust my instincts, right? I reason things out, and whether or not somebody tells me something different, I think confidence plays a huge role in this. And I think probably the biggest difference in terms of me now and me 12 years ago before, I really was in the entrepreneurial space was a tremendous amount of confidence in decision making. I had situations where somebody told me, revenue's going down because of this. And I had to make a determination if that was true or not. And my instinct was, no, that's not the reason. And we would have done completely different things if my decision was, I think you're right. So bottom line is, I think I'm not giving you a great answer, but I would just say trusting yourself and your own experience and your own instincts. And I think you'll see that as a common trait in successful entrepreneurs is they tend to be extremely confident, almost probably overconfident in many situations. They're not wishy-washy about what they believe. So,
all right, we're going to take a quick break and hear from one of our show sponsors. When we come back, we'll talk to Buck about some of his favorites as it relates to his life as an entrepreneur.
Have you ever thought about investing in real estate, but find yourself so busy that you don't have time for it? Do you have FOMO, which is the fear of missing out? At HanfordCapital.com, we help investors with passive real estate investments that project better returns than traditional investment vehicles such as the stock market. If you'd like to find out more about our passive real estate investments, visit HanfordCapital.com. That's HANDFORD Capital.com. We will jump on a call with you to discuss your investment goals and to see if our investments are a good fit for you. This advertisement is not to be construed as an offer or recommendation to buy or sell a security. Visit HanfordCapital.com. We are back with Buck Joffrey, and we are going to go through a series of quick questions and answers, Buck, called the trifecta. What is your favorite technology that you use in business that helps make your life easier every day?
Unfortunately, I'm pretty low tech, but I'll tell you something cool that I just got. It's called a Remarkable Pad because I'm a paper guy. And because I'm 45 and I grew up in school using paper primarily still, and it's a tablet, but it really does feel like paper. And then I can just email myself stuff. And when I'm doing podcasts, I just, I use it like a piece of paper. It's pretty cool. So,
what's a favorite quote that you've heard that has helped you as an entrepreneur?
I would say in the history of the world, no one has ever taken a rental car to the car wash.
What's a favorite book that has helped you make better decisions as an entrepreneur?
I think for me, what really started it all was Cash Flow Quadrant and just understanding the way that the world works through the eyes of an entrepreneur.
Well, I want to back up to that quote because I'm running that quote through my head again. I want to know there's got to be some sort of story behind that.
That quote was, I can't remember what the guy's name is. I think it came from, maybe it was Jack Kemp. Anyway, the idea was simply that, ownership, right? If you own something, you'll take care of it. And so the idea being that, if you're an entrepreneur and it's your business, you care. And if you're an employee, I mean, a lot of times, you punch in, you punch out, you don't care as much. So you're not going to go, you don't own that rental car, right? You don't own it. So you're just going to return it. You're not going to go take it to the car wash. So.
And I also use the same logic when trying to buy a used car. I will never buy a used car that used to be a rental car because they take care of those because they're not their own.
Exactly.
But what's the next thing for you, Buck, right now on your vision or dream board?
Well, I don't usually look at a dream board too much, but what I just, I'm diving further and further into the cryptocurrency and blockchain space. And so for better or for worse, and whether it was smart or not, I started a new podcast called Consensus Network to try to get people to learn about the space, because I believe it's going to be an explosive area. And I think it's still early, so that people can, it might be one of the greatest money-making situations that we're going to see in our generation, but you have to be smart about it. And so what I've tried to do is create this podcast without a lot of hype, with just a lot of information, education, and news. So,
well, and how can listeners reach out to you and follow you more and connect with you and maybe jump on some of your podcasts that you have?
Well, I think probably the big thing is, there's 2 podcasts. If you're interested in sort of the investing world that I talk about, and you're a high-paid professional, for example, and want to know how you can, invest in real estate without necessarily being, a property manager, you go to wealthformula.com. Lots of secrets of the, ultra wealthy that we use and try to bring down to everyday people. And then the other one, of course, as I mentioned, not Wealth Formula Podcast, but Consensus Network. Consensus Network is my podcast that focuses on blockchain, cryptocurrencies, financial, basically education and news in that space. And would love to have anybody who wants to learn about it. It's not, I'm not selling anything on either show. It's just pure information. So,
well, thank you so much, Buck, for taking some time out of your busy schedule to be with us today. Look forward to connecting with you and following you some more and listening to your podcasts and also having you on a future episode as you continue to grow as an entrepreneur.
Sounds good. Thanks for having me.
Thank you for listening to the Tough Decisions Network. Be sure to visit toughdecisions.net to gain access to show notes for this episode and to join our free weekly entrepreneur email, where we will send you news about the latest technology for your business, inspiring quotes, and the latest books for entrepreneurs. That's toughdecisions.net.